Good afternoon, everybody. Sue here, and I have the delight of introducing Julie Cameron, our expert today for our training and development workshop in Love Bizland. Why are we doing a training session today on cash flow? The reason is because for those of you who've been to some of my events, I think Cara's been to some, I think Janet was there at some, I did lots of surveys, sensitive surveys, and I had about 100 responses. And the reason it was done on paper rather than us discuss around the table, because we do a lot of discussing at my events around tables, because there's some sensitive stuff that people are concerned about. And the piece of paper just says, what are your biggest business challenges at present? And there was lots of things covered on those, but the main item that kept coming up time and time again was cash flow. People are concerned about cash flow now and also in the future with everything going on in the world. And some people have buried their head in the sand a little bit and said, no, the world is fine. But actually, as business people, we know that the world isn't quite as fine as it should be, and that people are holding on to cash a little bit more, not paying bills so quickly. So people are concerned about cash flow. And I've got about 100 of these surveys, these nice surveys that we put out with cash flow worries. And that's a lot. So we did have a different workshop today. If you probably saw, there was a change, which was actually quite a blessing because I wanted to bring in cash flow. We've got all these workshops booked and we hadn't got one ready to go. So I spoke to Julie Cameron, our lovely expert, and I said, as an action coach, can you do a workshop on cash flow? And she said, Sue, yeah, of course I can. No worries.
I was going to say, I'm not quite sure I was a bit like that, but anyway.
No, you weren't. But who did I think could help us is Julie. So I'm now going to shut up and I'm going to hand over to Julie. Now, do we all know Julie? Put your hand, just put a thumbs up if you know Julie. Ooh. It is. Julie, you've got to introduce yourself. So I'm going to mute myself now and introduce yourself. Tell us who you are.
Who I am, what I am, and where I'm from. So good afternoon, ladies. Like Sue said, my name is Julie Cameron, and I am the invested host for Core, the Solihull group, through Love Biz. But I am also a business growth specialist with Action Coach in Solihull as well. And I've been a coach for the last, over 3 years now, which has flown by. Prior to that, myself and my husband ran our own business successfully and exited it through the help of Action Coach, which is where I got my passion for helping, for business, for coaching, for education as well, and that business education, because you ladies know everything. You know all there is to do about business, but the challenges that we face on a daily basis is that we don't put our knowledge into practice. Okay, so one thing that we're covering today, when Sue said about cash flow, I should totally and utterly put my hand up now and say I am not a financial expert, okay, at all, in any way, shape or form. So what you'll find today, the things that I'm going to go through are quite simplistic, very easy to understand, because at the end of the day, I had to understand them and I'm not from a finance background. Okay, so the easier and the simple is better for me. So, and that's the way that I teach. So as Sue says, with Love Biz, I always say it's a safe space. Okay, this is a safe space. We may be recorded, but we are a safe space. Jackie, I'm with you. We like easy to understand. It's a safe space. So no question is daft, ladies. No comments silly. It's a safe space to share questions and thoughts and concerns. Okay, so we're going to get started. So I'm just going to share my screen first of all, if that's okay. And the first question, so anybody who's been on a session with me before knows that I like interaction. As you all kind of sit there and go, really, Julie, I was hoping just to sit here with my coffee for the next hour. So what are you wanting to get out of this session? Pop it in the chat box now, okay? So chat box, and I can see the chat box. So what are you wanting to get out of this session for the next, 40 minutes? Go, go, go. I should have music. What money were we, what song were we talking yesterday? Money Talks, wasn't it? Money Talks. Doo-doo. I just realized.
I so want to sing now, Julie, but I'm not going to put any pain, and it might have been my singing yesterday that caused the awful rainy weather.
I love it. I love it. So good advice and guidance on quarterly forecast and flow. Yeah, can do that. Tools and ideas for regulating cash flow. Yeah, definitely. Nikki, you are my sister in my kind of, we're on the same wavelength. A chance to learn more. I like learning. I love to learn. So definitely we can talk about that. How to encourage a steady flow, Kirsty, definitely. Yeah, I like those. I can do that. I can do that. You'd be all pleased to know for you. I was thinking if somebody put something on there that I wouldn't know, then we're a little bit screwed. And what's the last one? All of the above, Jackie, and more, I should think, and more, I should think. So let's get to it with the jargon. This was one thing when I first started, like in business, I was like, what's that mean? What's that mean? What's that mean? Because you just never know. And people have different terminology for different things. So turnover. Anybody feeling brave and wants to unmute themselves and tell me what turnover is? No. So turnover is the money invoiced for goods, product or services that have been sold. Okay. Profit. Anybody have any idea what profit is?
Everything you've got left after you've paid all your bills and taxes.
Absolutely. So the profit is the difference between what you sell it for, so your price, and what you bought it for, and any costs associated in between. So it's the bit of money that's left at the end that you don't have to spend for bills or anything like that. Okay. And what's cash? Well, cash
King.
is, say that again, sorry, Karen?
Cash is king.
Absolutely, absolutely. Cash, it's the real life money that you have available to spend in your business. It's what's in your bank, it's what's in your pocket. And why is cash flow so important to us? Mainly because it's what we have to spend in our business. If you have no cash, how can you buy things? If you have no cash, how can you pay for your wages? If you have no cash, how can you do everything else? You know, and what we see in businesses today is that this cash is the biggest flare up in business, emotional flare up in business owners, because we all have a level, either personal or business, okay, that we let our bank account go down to. Okay, and if it goes past that point, we all kind of have that moment of panic. Okay, that moment of like, you know, what on earth am I going to do? You know, I've only got, you know, that in the bank, you know, and that figure is very personal to us. So it can be £1,000, it can be £50,000, it can be £500. Some people live in their overdraft. It can be, you know, £500 in their overdraft. It can be whatever. But it's at that point that we panic. Okay, so we panic. So the thing that we have to remember is we have to know what our cash flow is and how much cash and where it's coming from and so on and so forth. So the things I'm going to talk about today is, first of all, net cash. Okay, we're then going to touch on a subject that I love, is called discounting. Then we're going to look at cash flow forecast, and then we're going to finally look at the cash gap. So lots of cash in there. Money is king. So first of all, I want you all, I'm just going to stop sharing my screen just at the moment because we're going on to my spreadsheet. So do you like this? Here we go, because it's interactive. Can we all see my spreadsheet? Perfect. So net cash. This is basically what money we have. So how much money do we have in our bank account? So everybody grab that spreadsheet, that piece of paper, that pen and paper. So every Monday, what I want you to do is write on your piece of paper how much money you have in the bank. So for example, we're thinking that today's Monday and we're going to write in that we have £10,000 in the bank. Okay. Then I'm going to ask you what money is owed to you. Now, when I mean that about money that's owed to you, I mean that what is owed on that day. Okay, so not what's owed in 4 days, 7 days, 10 days time. It's what money is owed to you that day. Now you can log on to your Xero, QuickBooks, whatever accounting tool, or you can ask your accountant for that figure. So for today, I'm going to type in there £20,000. Now I'm using round figures, okay, because it's easy for being on here. Okay, so today I'm going to put in 20,000. So then the next figure we're going to look at is the money that you owe. Okay, so again, not money that you owe in 4 days, 7 days, it's the money that you owe today. So for that, I'm going to use the example of £40,000. So how much net cash do I have? Well, I've got 10,000 in the bank. I'm owed 20, but I owe 40. So actually, I have minus £10,000. Okay. Now, what I want you ladies to think about is if you go to your bank account and you initially think, oh my gosh, I've got £10,000 in my bank. I feel like I've got money. But actually, in theory, you haven't. Because you're minus 10,000 when you look at the money that's owed to you and the money that you owe. Now, it's a really simplistic way of looking at it. But if we're not aware of it on a weekly basis, then we can't put strategies, things in process to get that money back to being a positive figure in our net cash. Now, I want to kind of highlight it the other way. So if you have £10,000 in your bank, okay, the money that's owed to you is £40,000, okay, but you only owe £1,000. All of a sudden, your net cash is £49,000. So a hell of a lot more positive than you thought it was. Does that make sense? Yeah. So if I was to ask you girls, you ladies today, who knows how much money they've got in their bank, what's owed to them, what they owe, how many of you would nod your head and say, yeah, I know that? Nikki's with me. Yeah. So just being aware of it, because then the strategies that you can put in place to reduce that figure that's owed to you, so that's actually cash in your bank rather than a debtor. And actually the money that you owe, can you put a strategy in that to get that lower? Now, I also want to talk about, you know, the money that's owed to you, because this is a way of generating more cash into your business. Now, if I was to ask you, do you know who owes you money? And when do they owe it? So in other words, what's owed, what's 7 days overdue? What's 14 days overdue? What's 30 days overdue? What's 60 days overdue? You know, so as a business owner, we should be monitoring that, because how do we chase money that's owed to us? Do we, you know, do we use the automated reminder on Xero, or do we on QuickBooks or whatever accounting platform you use? You know, but just think. Yeah, Sue does. So just think, does a personalized message work better?
I've got a question.
Go
Sorry, Julie. You said you wanted to interact.
I do. Go for it, as long as I can answer it.
Well, one of the questions, I use QuickBooks.
Yeah.
So I know exactly where my figures are when someone's overdue.
Mm-hmm.
I just wondered, does it, what everyone else uses, if you might be putting that in your presentation, but some people might not use anything to help with their, you know, their cash flow in terms of invoicing. So would it be interesting to find out?
So who uses an accounting software like Xero or QuickBooks? Who uses a spreadsheet? Yeah. So we all use a tool of some sort, because a spreadsheet is just as easy as using Xero. The advantages of using Xero or QuickBooks or an automated system is that it links with our accounting software, with your accountant and so on, and it's very easy. You can do everything from one platform, so you can invoice, it monitors everything like that, so it's a very seamless, it sends out reminders, you know, all of that kind of thing. However, a spreadsheet is just as good as long as you're monitoring as long as you're monitoring and as long as you're doing it. Depends on your flow, your traffic, because if you have an automated system, just think how much time that frees you up rather than having to do it all manually. So something to investigate, but it's interesting. But when you're thinking about your overdue accounts, so Kate, I bet you chase your overdue accounts very differently to how Sue chases her overdue accounts. So Sue potentially may rely on Xero to send out the automated messages. But I bet you send out the personal message, Kate.
I do, but my business is a slightly different model. So yeah.
But everyone's different. But actually a personalized message, does that get us further than an automated message? That automated message may go in people's junk. It gets ignored. Yeah. Whereas a message from Sue Crooks might go a hell of a long way.
It really doesn't, Julie. But I think you have to
come on.
because you can end up going into spam boxes, but also it's writing those automated messages that are right, not just the typical ones.
Yeah, exactly. So it's making it personalized to you, but just think, you know, they do often get ignored. So is there some way of making it personalized, making it different? So therefore we're encouraging people to pay because it's a personal thing rather than automated. You know, and also money that's owed to us next week. Oh, my spelling's rubbish down there. Oh, it's the freeze back thing. So money that's owed to us next week. So who knows what money is owed to us next week? Are we aware of it? Yeah, Kirsty's waving, so Sue, brilliant. Because you need to be aware of what's coming in next week. And what happens if we send a message this week to say, you know, just a reminder, don't even have to put just a reminder, just say, looking forward to receiving payment for invoice, blah, which is due next Monday. It prompts people. We all forget things. You know, a number of people forgot to jump on today. And Sue sent out a reminder to that this morning. We all forget things, we're only human. However, just think about your process. Think about that system. Think about what works in your business. Okay. So one way to increase our cash flow, people automatically think I need to increase sales. Okay, I need to sell more to increase cash, because if I sell more, I get more money. So more money equals more profit equals more cash. Okay. And many of us think about how we are going to kind of increase sales. And one of the tools that a lot of us turn to is discounting. Okay. But what I want to talk about today is how discounting can have a negative impact on your business and on your cash flow. Okay. So let's look at discounting as whether it's a good thing for your business. So sales price, you sell one item at £100. Okay. Your costs are £70. So therefore we are making £30 profit. We all agree. Please say yes. Okay. We want to make £600 worth of profit overall from this item. So how many units will we need to sell? Okay. 20? Who's got a calculator? Maybe I should put that down. Who's got a calculator with us today? So what happens if we reduce by 10%, if we sell this for a 10% discount? Okay. You'd be pleased to know I did put my figures. I've got a sheet next to it, so I do know what I'm working out. So 10% discount, our sales price all of a sudden comes down to £90. Okay. We've still got the same costs, but our profit is now £20. We still want to make that £600 profit. How many more will we need to sell? 30, Sue. Well done. So just to stand still, we need to increase our sales by 10. Okay. Now, the reason why I'm showing this for an example is actually you think, oh yeah, I'm selling more, but you're actually still only standing still. You're not increasing any cash into your business whatsoever because you're literally standing still. So if we were to look at a 20% discount, so our sales were getting down to £80, our costs are still 70, we're making a profit of 10, we still want to make £600, okay, we will now have to sell 60 units of the same item to stay still. Okay, now it's possible. You may attract more people. You may sell more than 60, but just think how many more staff would you need? How much more time? How much more marketing? How much more, you know, and that's keeping your costs at the same level. Now, potentially those costs could increase, which could impact your cash flow. Now I'm going to be radical here, okay? And everybody hates me for saying this. But what happens if we increase our prices by 10%? You know, everybody gets a fear at this precise moment because increasing prices is not something that we like to do. You know, we find it hard. So if our sales went up to, £110, so our cost stayed the same, our profit went up to £40, and we still wanted 600, we would only have to sell 15 to stand still. Now, when was the last time anybody increased their prices on the call? Has anybody increased their price in the last month? Interesting. Has anybody increased their prices in the last 6 months? Yeah. Last year? Okay.
Julie, I have a different methodology, and I go into businesses and I would rip that 70 apart and take the cost down, because no customer wants an increase. And what my business does is takes that cost right down by improving efficiency. I'm not saying it's wrong. What I'm saying is that's much better than going, oh, I've got to increase my prices, because people will look somewhere.
But if those costs were as static as they could be, that's purchasing from a supplier. There's other ways to do it, Janet, and I totally agree with you. There are other ways of looking at that cost element. You know, is that, you know, but we all know that if you're buying electrics going up, cost of living's going up
massively.
So actually those costs, if anything, if they stay at that 70 is quite good. If not, they'll go up.
Yeah. I was just going to say that costs, as we all know, in everything, whatever you do at the moment in business, hence why a lot of women are going back to full-time employment, because they can't see how to get out of this, and this is why this is so important. But you know, over time, sorry for butting in, but those costs, if this was 6 months ago, that cost could probably be £90 now.
Yeah. So it could be a lot lower. Do you know what I mean? So that cost could have been £40, you know. But we're keeping it very simple, Janet. I totally agree with you. There's always the first element that we always look at is costs, you know. So in other words, can you switch suppliers? Can you you know, negotiate terms? And we'll come on to that shortly. Do you know what I mean? But for simplicity, but sometimes, you know, increasing our prices, cost of living's gone up, everybody else is increasing prices. Why aren't we?
Everyone. Yeah, exactly.
You know? And I'm not saying, you know, inflation's gone up. I think it was like what, 10-11% inflation. So actually, if you're keeping your prices below that inflation level, so if you're increasing them by say 5%, and you send that message saying inflation's 11%, but I'm only increasing mine 5%, people go, well, that's absolutely fine. And a lot of us as business owners, we have that fear. We have a fear of increasing our prices, okay? And that's our fear. It's not our customers, it's ours. Now, I'm not saying do it across the board and do it by 50%, 100%, you know, anything like that. I'm thinking, you know, you need to look at the item by item and strategically. Okay, how much profit are you making on each item? What are your best sellers? What are your low sellers? You know, it might be a case of your high ticketed item that don't make you enough profit, but don't sell, you keep the same, you know, but your higher volume product that you're tipping over, you know, it might be a case of increasing that. So it's looking at it very strategically. But for simplistic terms, it's just showing you on this spreadsheet that if you were to increase your price just by 10%, to stand still, you actually need to sell less. So then to sell less, what would that do to your overall cash because you're buying in less? It would free it.
And we're all different businesses. I'm just looking around the room at the moment. I mean, Karen at Obsession their industry's been hit terribly hard with utilities and costs of products. I know that because I've got a couple of clients. So Karen, I saw your hand go up twice for increases, because it's really hard, isn't it, to keep on top of.
Our main suppliers increased their prices in January by 9%, July by 5%, and they're going up again in December.
And that's on top of your utility costs.
Our utilities have gone up 4 times what we were paying.
Yeah.
Crazy.
So it's all our profit by those increases alone are wiped out.
Yeah. So it's a case of
along with everything else that's going up, and you know, the rate situation, because now we're up to full rates. Yeah. So you know, you've got another 10 grand a year there, and I mean it's crazy. So our prices went up in January, but only by 3.5%. But we're going up between 5 and 10% depending on the service on the 1st of December.
Definitely.
Yeah, and you need to. Kirsty, you're the same. You buy a product in, you have utilities. It's a little bit different to maybe Kate, who has you're with Flamingo and you're buying products in. So it's although it's both product driven, it's slightly different. So Kirsty,
it's an eye-opener since COVID, the amount of problems we have getting garments into the country, the out-of-stock stuff, the amount of extra work that's involved in an order now is horrendous, because people want an order of certain things, but that size isn't in stock until December. I had one customer who ordered in October last year, didn't get his garments till July. Yeah. He wanted something specific, and the prices were going up every month. Yeah. Every month. And I just had to pass it on. Just passed it on all of the time because I couldn't do anything else. I earn, my profits are my wages. There's a bit that goes back into the business, but that's why I moved home and stopped having a unit. So I just have little overheads. I'm just earning my wages. That's what I do.
Yeah. And it's the same, like a lot of businesses are experiencing this. Obviously, you know, ladies, want you to know that you're not on your own. And I think that's really important to kind of experience. So it's like sharing those stories and sharing that experience together about how we're combating it, each individual person. Because like Sue said, all our businesses are very different and they're unique. You know, we're finding a lot of people are not working from home now because they can't cope with the utility increase. They'd rather go to work and somebody else pay for the utilities, you know, and so on and so forth. But it's and we'll come on to the cash gap, because Kirsty, it's totally true. You know, you're ordering something and you're not getting paid for it from the client for another 9 months, but actually you've already paid for it. So you've got this
I've had to completely change how I invoice now. And unless you are a long-term customer, you pay up front.
Exactly. And that's
even though I've got 30 days grace on everything I order, I want that money paid and out. I don't want the bills waited. I can't be asked to chase people.
No, absolutely.
So it's all how now.
It's how the world is changing with cash flow, because like we've all said at the beginning, cash is king. You know, cash is king. And so if we're not aware of what our cash is, where our money's owed, what we owe, you know, we have no control over our finances and where that cash is coming from.
Julie, can I also make and I know this is probably quite specific to my business, but going back to your discounting, I don't discount at all, because I find that then my customers think that I'm either trying to offload something or the value, I'm devaluing my product.
Absolutely, absolutely. We always talk about Action Coach, we always say to our clients, don't discount, because you're eating into your profit at the end of the day. So adding value is a lot better. So, you know, I always use the example of a men's clothing store, because men's suits are always on sale, right? 9 times out of 10 men's suits are always on sale. It's to encourage them to go shopping. Women's never, but men's yes. And if you discounted, so you've got a suit there, it's 150 quid, for example, you know, you discount it by 10%, you know, you're giving them the 15 quid off, and that's eating into your profit as a business owner. However, if you said buy that suit and I'll throw in a shirt, that shirt is actually only cost you as the business owner as say £3-4. So therefore it's costing you a lot less, but actually the value to the customer is that you're selling that at 30-40 quid. So all of a sudden that becomes a very nice incentive to buy that suit, but actually fundamentally it's only costing you the cost of a shirt. And this is where collaborations come into it. So in other words, if you have got a product that you can work with another business and you can say, actually, give me your database, you know, we'll share databases. I'll give all your clients a, you know, nominal gift. So in other words, Brad Sugars, who's the owner and founder of Action Coach, he was involved in a business of kind of like the silk kimono, you know, the gowns. And he went to a salon and he said, right, okay, I will gift all of your clients one of these silk gowns. They have to come into my store to buy it and they just redeem it with the ticket. And they was like, absolutely. Now he got a good deal on these silk gowns. They're about £2 or £3 a shop. Okay, these people came in droves. Some of them just bought, you know, not bought, but just got the silk kimono. Okay, others have spent a hell of a lot more money in that shop. Okay, so yes, it was an initial outlay, but actually his profit that he made from it was a lot more than his costs. You know, so it's thinking a little bit outside the box about collaboration and how we can actually keep that flow of sales coming through our business. Okay, does that make sense? So moving on to cash flow forecasting. So if any of our clients have a challenge with, the most common thing that we as action coaches hear about is a challenge with time management. Okay, 9 times out of 10 people kind of turn around and say, I have no time, there's not enough time in the day. And one of the first things I always get them to do is actually do a time log. So every 15 minutes, write down what you're doing. Okay, one, it makes you feel more aware of what you're spending your time on, and two, it'll highlight top 5 time wasters, etc., etc. Now, if we want to get kind of on top of our business, on top of our finances, on top of our cash flow, then why wouldn't we do the same with our cash flow? Okay, so one of the things that we always get our clients to do is to do a cash log. Okay, you know, we start at the same place. So every week for 5 weeks. Now, the reason that we do this for 5 weeks is it takes us over a month end. Okay, so we, on a Monday morning, we always get our clients to write down how much cash they have in the bank. Okay, so for this, our opening balance, I'm going to put it down at £20,000. Okay, I then keep it very simple and we talk about the money coming in. So the sales, the turnover, the income. Okay, now I split it with my clients into 2. Okay, one is stock. So in other words, if you're a product selling, okay, one is from the stock that you already have, and one is from the stock that you have to order in. Okay, now if you're not a product business, it's just the money coming in. Okay, but I often ask them, if they are a product, what's in stock and what's not in stock. Okay, so let's think about this one. So let's have £2,000 coming in from there, and we have £8,000 there. Okay, so money going out. Okay, this is over a week. So how much money in that week do you have going out? How much of it is related to your sales? So these are your expenses. Okay, so related to sales, I'm going to put in here, well, let me think, £5,000, and other is 2,000. Now that could be rent, it could be anything, but it's not related to your sales. So therefore my closing balance, I hope, is about £23,000. Okay, and it's as basic as that, ladies. And you need to do that for week 1, week 2, week 3, week 4, week 5. Okay, because what we're doing is we're analysing a trend. We're looking for what's happening in your business. Now, from 1 week only, we can't decide what's happening. It doesn't give us any data. It doesn't give us any historic data. It doesn't tell us anything about your business at all. I just know how much you've got in your bank on a Monday, and I know what's going out, and I know what's closing. It doesn't tell me much at all. But over time of filling it out, week 1, week 2, week 3, week 4, week 5, it'll give me trends. It'll give me an idea of what's happening. Okay, and from there we will be able to forecast. Okay, so is your business one of those every month keeps on recurring? Okay, So on week 1 so we're week 1 in November at the moment. So week 1 in November could look like this. So is week 1 in December going to replicate? Is week 2 going to replicate? And this is where we start to forecast. Okay, keeping it very simple. Now you can get very technical, you can put in different lines, you can, you know, call things differently, but keeping it simple is the way that I work. Okay, so if you're, the reason that we split it up into stock and on order stock is the money coming from that stock, that's straight cash down on your bottom line because you've already got the stock, you know. So questions to ask yourself, you know, when do you owe money? Well, I owe money in the second week of December. So you know that when you're doing your forecast for the second week of December, that money needs to go out. Okay. So to answer Cara's question about like quarterly, potentially you could do your cash flow for a quarter, and then you look on the data that you have for the next quarter. Or what you may find is if you do your data for 2 months, you'll find that there's a lot of trends. Okay. And a lot of predictable things that happen within your cash. Therefore, it's very easy to forecast what's going to happen going forward. But then think about if you're implementing a new strategy or a new marketing strategy, or you're changing terms, what impact will that have on that forecast that you're creating? Okay. And if you're unsure, monitor it and then forecast accordingly moving forward. Yeah. Your forecast should be based on your actuals. We can't stand here and go, the wind is blowing from the east. You know, we're going to get £10,000 in next week, but I don't know where from. It doesn't work. You know, so doing an actual, a money log of where your money's coming in is key. And it's scary to think, you know, where will it come from? Do we know? But it also highlights what we need to be doing to generate more.
I was just about to add that, Julie. That's where our marketing and business plans all come in to go with our cash flows, because it is sometimes just like, oh, I'm going to get £10,000 in next month. Yeah, but how the hell? You've got to have some kind of promotional marketing business plan, haven't you? Absolutely. To be able to actually understand where that money is going to come in from and how it's going to come in, because it ain't just going to happen by luck. Yeah, it needs a bit of hard work and planning behind it.
It does. It does. And if we don't analyze what's happening today, you can't plan for the future. So you can't do a cash flow forecast if you don't know your cash flow now. You know, so, you know, use terminology that you know. Don't worry about like the jargon or your accountancy speak. You know, probably Janet's panicking at me. But it's literally, you know, use, you know, that's why I've got money coming in. You know, other people go, it's turnover. I was like, that's money that comes into the bank. You know, that's what you need to do. Do it simplistic. But analysing what you're doing, we do it with time. Let's do it with money. But over a 5-week period minimum, because you need to know what happens at month end. Okay, so let me just stop sharing that one and I'll go back to the other one. Any questions on that at all, ladies?
No. Just one quick one.
Yeah, of course.
Talking about cash, sorry, I'm eating a nice lolly because it's helping my throat, not because I think it's summer. Anyway, in terms of credit cards, some of the people I work with, businesses, have got quite big credit cards, and they don't put that into their cash flow. Is that correct? Or should they still consider the 40,000 they owe or whatever?
That's money that they owe. So I would definitely put that under the other. Yeah,
they honestly think of it as not real money. And I go, no, you're going to have to pay that one day.
Yeah, it's a debt at the end of the day. But I would argue that I would argue, you know, it's cost that's going to go out each month. If they're not paying the whole card off, it's cost that's going out each month. So it's that's the decision what figure to put in there, Janet. But I wouldn't necessarily think of it as, you know, if they're going to pay off the whole lot, then yes. And it goes back to that question we always ask our clients, you know, how risk averse are you? If you don't like credit, then we don't use them, you know. But if you do, then it helps, you know, in certain ways, but it's down to that business owner. So I would say it's money going out because you have to pay it. It's a bill, you know, unless they've got terms that they don't pay it, which, you know, happy days.
We all want one of those cards.
I was going to say, I want one of those credit cards, thanks very much. And if you could let us know which ones they are, that would be really appreciative. But you know, it's thinking about, you know, what are your costs going out? So anything related to sales or other, and that would fall under the other for me.
Okay, thank you.
Okay, no
And
problem.
that also comes if you've got bounce back loans, you're still paying that off. Like every month I have to pay off in both my businesses a bounce back loan. So that has to sit somewhere as well if someone else has got bounce back loans for their businesses.
Definitely, it goes on that money going out aspect. So anything related to sales, and then the other, so your rent, your utilities, everything that goes on there. And what you'll find is that other line is quite constant, so it's easy for forecasting. Because your costs, your direct costs, you know, those costs are easy to kind of ascertain what they are. 9 times out of 10, they don't go up or down unless utilities go up, etc., etc. But we normally know about that in advance, so we can put it in our forecast. So the cash gap is a number of days from when we start to spend money on a project until we are paid in full for that same project. So this is what Kirsty and I were talking about earlier. You know, it's the days between when we're funding it for the customer. So in other words, you get an order in and we don't get payment. Okay, but we've already started working on that project, whether that is your time that you've already started working on it, because your time is worth something, ladies. You know, you have an hourly rate, we all do, or whether it's actually purchasing specific products. Okay, and somehow we need to shorten that cash gap. Now, Kirsty came up with a great idea earlier, a great thought. And what we're just going to look at is some strategies, some solutions that will help you shorten that cash gap there. Okay. And what I want you to think about is how payments and invoices are managed in your company. And it's key. So I want you to pop in the chat box, you know, where is the cash gap created for yourself? You know, do you have a cash gap? So Cara, I'm just thinking about your book that my friend loved, by the way. Your book, obviously you spent a lot of time on that. Okay, so in theory, your cash gap was from when you started it to when you finished it, and you got that first sale through. You know, because you spent a lot of time on that, a lot of energy on that, you know, but you didn't see any money for it.
I've got to say, Julie, I did get a publisher's advance. I was very lucky because not everyone does. Sue, thank you for the promo. But it's yes, and I get a quarterly statement from my publisher as well. But it is, it was a long time in the making, and the advance, I spent 18 months writing the book from point of concept through to publishing. So
when you're doing your cash flow forecast, that payment's only going to come in quarterly. So your money coming in from that is only quarterly. So actually your forecast, you need to make sure that you've got that money coming in, if it's static, or what the sales are looking for, keeping an eye on those sales, so therefore you can predict what money you're going to get through from your publisher, you know.
Yeah, and Julie, that point you're making about time is a really interesting point as well, about factoring your own time. You know, as a solopreneur, and I know a lot of women in this group, it's also thinking about sometimes the time we spend and the value of our time and decisions we make about that. I've been reflecting a lot on that at the moment. I do a lot of free things for book promotion, and then it's like, the value of that PR, but also the time. That's an interesting space, isn't it?
Yeah. Exactly.
That's a whole nother hour.
You
know, we're all worthy of the time that we give to whatever it is, whether it's you know, Karen doing a consultancy for somebody for their wedding hair. You've got to charge for that because it's your expert advice. Cara, you're what you do to help people, it's your expert time. And Nikki, again, telling people and helping people to reduce their utility bills. It's all of us in this room. It's Eva, she's doing a workshop for us in the next few weeks. We are all worthy of invoicing for our time.
Definitely. You wouldn't go to a shop and you wouldn't say, give me that for free, would you, for a product? But they would do it quite happily for time. I call them time vampires. They suck it out of you.
Yeah.
You know? I've got a whole hour presentation on time vampires, guys. Honestly, time is a big thing for me because I'm busy. You know, we're all busy women, and that's what I love about talking to other women, because you get me. You know, you get the challenges that we all have. You know, I did a time log. I was struggling with time, and I did a time log a few months back for my coach. So I have a coach, and I did my time log. She was like, what would you tell your clients? I said, to do a time log. So she said, what am I going to ask you to do? And I was like, a time log, coach, all the time. You know, so I did it, and I sent it to her, and she was like, what's your learnings from it? What have you seen? And I said, well, you know, for me, I do a lot of traveling. I said, so I feel like I waste that time because I'm traveling. And she was like, no, I see a very busy lady. And I was just like, it was quite nice to be told that actually I was being good with my time. I was just busy, you know. And it's the same with your cash. You know, we are busy, you know, so therefore our time is worth something. It's precious. So don't give it away for nothing. You know, it's precious. You wouldn't give away, you know, something else that's precious to you for nothing, would you?
I think as well, you're undervaluing yourself. I do nothing for free now. Nothing.
No, but to be fair, Janet, I totally agree with you. Totally agree with you. I do, but I do it with a strategic mindset. So when I when I gift my time, I think that sounds nicer. When I gift my time, then I'm doing it for a reason, for a rationale, and I don't just gift it to anybody. You're very special, ladies.
And you're doing that exactly now for this hour plus. You're gifting us your time. You're making no money for it.
No. I think it's important. It's important to educate. It's important to learn, and it's important, you know, to get. It's about visibility as well. So, do you know what I mean? It's about showing that expertise.
Oh, that's a big thing at the moment on my mind, visibility. Again, that's another thing to talk about.
Yeah, put Sue and me in a room where we talk for hours. Anyway, so strategies to shorten that cash gap. So things to think about, ladies, and this is where I'm going to go now. So it's partial or full deposit on contract to be paid up front. So this is exactly what Kirsty was talking about earlier. You receive an order, you don't process the order before you get payment. Okay, show me the money. What was that? Show me the money. And that's not just for, and this sounds maybe controversial, but it's not just for products, it's for services too. Okay, so Cara, they want to book you for an event. Can I have a deposit, please? Because then I know, 1, you're serious, 2, you're not going to cancel on me, and 3, I could go shopping. No, you can't. But do you know what I mean? You know. So, and equally, you know, I've got clients that instead of, because they're like, oh no, you know, it's quite a lot of money to pay up front. Well, okay, then do it in 3-month installments. Yeah. It shortens that cash gap for you, and it puts it in your bank, which is where it needs to be. Or it goes into your bank so they can spend it on your money and invest it on your, not on your money, you can invest it on your business to get that marketing, etc., etc. Number 2, can you ask for payment installments? You know, exactly. Finish projects on time. Time is key, ladies. So they can be invoiced. So if you said something is going to be finished next week, finish it next week. Okay. So you can be paid, and so you can invoice straight away. Invoice immediately on completion of the job. Now, again, quite controversial. Some of us have systems in place where we only invoice on a Friday, we only invoice on a Monday, blah, blah, blah. No, invoice when the job is done, otherwise you'll forget. Don't do it on a monthly basis. Because all of a sudden, if you finish a job on the 2nd of November and you're not invoicing until the 30th, oh my God. And then you give them 30-day terms, you're looking at a cash gap of 2 months.
And then you also have to consider, when's their payday? When do they look at all of their invoices and pay?
Absolutely.
We're not going to pay you for another 30 days after your 30 days, because we only do our invoicing on the 19th.
Absolutely.
So I'm going to have to wait. And you're like,
absolutely. I love that. No, totally 100%. absolutely with you. Use a delivery and acceptance process at job completion. What do I mean by this? So if you're delivering something and they're happy with it, get them to sign to say they're happy, because it solves any challenges at the invoice payment date. Okay. So you've delivered it, you've accepted it, you're happy. There's my signature. Happy days. Can you pay me? Thank you very much. Systemize your billing on your invoice process. So in other words, do you have a system to do it? So, you know, Xero, QuickBooks, can you do it automatically? You know, what is your process? You know, I always talk about cup of tea for flowcharts and making your system as easy as possible and for somebody to follow it. So in other words, if you know, Cara and I were making a cup of tea, we'd probably make it very differently. Very differently. That's when that caffeine in my would for a start. But we would make it differently. But if Cara was making me a cup of tea and I wanted it the same, I would give her my process, my flow chart. Get a china cup from the cupboard, put the tea bag in, boil the kettle. You know, it's as simple as that. What is your system for billing or invoicing? Complete your billing invoicing on a weekly basis. So are you invoicing? Are you billing? Are you, you know, it goes back to when are you actually doing it? Give 7-day terms instead of 30. So ask for people to pay within 7 days. And in fact, ask them to pay it when the invoice is given to them. Can you pay within 24 hours? You know, can you pay in a day? Can you pay? What are your terms? Can you shorten them? Will increase that cash flow into your business. And you'll find these days, not a lot of people do 30 days or longer. It's getting shorter and shorter. So it's 14/7. And nobody quibbles over it as long as you are transparent with that. So multiple invoices with increasing demand at 14, 30, 45 days. So are they overdue? You know, sending it again, personalized, you know, being on top of what you are owed. So it goes back to that net cash, that first spreadsheet that I showed you. What is due in 7 days, 14, so on and so forth. Nearly there, Kate. 1% or 5% incentive for early payment. I'm not quite sure how I feel about this one. You know, it's possible, depending on how large the invoice is, that can be a good one to use. Add and collect interest on overdue accounts. Well, if you don't pay in 30 days, there'll be an extra 10% added. If you don't pay in 7 days, there's an extra. You know, can you do that? Is that something that you want to do? These are all just ideas. I'm not saying do all of them. You have to find the fit for your business. Outsourcing the entire bill and invoice process. Take away the stress. Get somebody else to do it. Yes, you have to pay. Yes, it's an extra cost. But actually, if they're on top of it and you're getting more money into your bank because they're chasing everything, then is it worth it? Potentially. Reduce stock by using lower stock trigger points. So in other words, you know, if you are carrying a lot of stock and at the moment you reorder at 100 units, if you know what I mean, then fancy lowering it to 50. So therefore you're buying in smaller volumes. That's what that does. Okay, potentially can increase cash into your business. Buy stock on consignment and pay when you're sold. Okay, so in our previous business, we sold the taser stun gun to the police. And literally one of the things that we purchased from America were the batteries and the cartridges for the guns. So we shipped them over by sea and we held them in like the duty-free kind of containers down at the airports and so on. And we only, when we took it out of there, did we pay the Americans. Okay, it was an agreement with them. So we didn't have to buy the bulk. We only bought when we'd sold it. And it increased massively the cash flow into our business. And they were happy with those terms because they knew that we were going to buy it because we'd shipped it over, you know, but it meant that they had a regular cash flow going into their business, but it freed up the cash flow for us as well. Negotiate longer terms from suppliers. So in other words, are your suppliers asking you to pay within 2 days? Can you negotiate that to 7? So before I finish with 1 minute to go, how was that for tiring secrets? What have been your key learnings from today, ladies? pop them in the chat box or just talk to me. I don't mind either. Nobody's learned anything, 1 minute.
Well, shall I tell you what I'm going to do now, ladies? I am going to stop the recording. So if anyone would like to speak about anything that's not recorded, please do. So let's all wave to everyone who's watching this on replay and say thank you very much. And we will stop